Hello everyone, K Kim here. Today is November 3rd, 2017, Friday. Again, my name is K Kim with the Traders Club. Welcome to the market update. Today we're going to be looking at Spider, IWM, Qs, XLF. We'll look at XLE as well. Look at Intel, Apple had earnings yesterday, and Qualcomm. Qualcomm is seeing a massive amount of attention today after the Broadcom. There's some talk that Broadcom may be taken over, and we'll end the video with gold, silver, and miners there. Hope you guys had a good week trading this week. Market continues to climb to the upside, and that's exactly what you will expect to see. Again, at least in a probability sense, we have to continue to give benefit of the doubt to the buyers in the minor term as long as we stay above 20 MA. And just to follow, we've been talking about this moving average, right? Remember when we talked about 20 MA, the 50 MA, 100 SMA, right? As long as we stay above 20, minor term sentiment is bullish. As long as we stay above 100 or 50, intermediate term sentiment is bullish. But that 20 has been a strong support for what? For how long now? Since September. So it's been what? 9, 10, 3 months. 3 months. It's been strong support, and once it broke out of this channel, right, this rising channel, we've been talking about this level for quite some time now. It broke out with that confident looking candle there, and then it started grinding, and then you can see that we retested it on that day on late October, which was coinciding with the 20 EMA. We saw the bounce, some volatility here, but the market continues to thrive. So as long as we stay above this rising channel, I would have to continue to look at this market as bullish in the minor to intermediate term. And which I talked about last week to follow. I do think that the volatility is going to show up in November. We're probably not going to see like this smooth move that we saw in the month of October. You see how it was smooth, bullish move. But I think in November, we're probably going to see some volatility. That doesn't mean that we're going to see 5% correction or the crash is going to come. I don't know if you guys remember back in March how I talked about that. I don't believe that we're going to see any more than 3% correction this year. I think this was about 2% correction. This about 2% correction. This was 2.4 though. But I remember, I don't know if you guys recall that I talked about how probably not going to see anything more than 3%. And so far, we have not seen anything 3%. We did see 3.4%, I think, here in March, late March. And then all these little corrections were about 2%, maybe 1.5% here. And ever since then, we're getting into November. We got another month. Well, we got November, December, 2 more months to go. But I don't think we're going to see any more than 2 to 3% correction. Possibly may see, 2% correction November. It's tough to say as of today because I don't see any evidence of that as of now. We do have weekly overbought condition. Again, that does not mean that the market is going to see a correction or it's going to pull back. We could very well grind higher. It just means that it's going to the odds are catching up against the buyers. You can see if we look at here, let's see, this is a weekly chart of S&P. If you look at the RSI here, they're getting into quite a bit of a high level here. We're actually getting into new highs. We haven't been in this level since 2004. We did get in 1995. We did get into that level. Let's put another line there so that's all-time high. So maybe that's kind of what it's going after, but we are getting into the level. But again, this does not mean that it must come down. It just means that we're starting to see, you can see right there on the stochastic, definitely hitting that all-time high on the stochastic there. But again, it could this does not mean that it's going to see a correction. It just means that the odds are catching up with the sentiment that is bullish for the buyers. Does that make sense? I know it's not black and white, but market is never black and white. So what I do is I continue to give benefit of doubt to the buyers in the minor to intermediate term in the overall market. So when I see stocks that I'm holding and they start to rip to the upside, I start to close some of them out. my call positions. Obviously, my investment stocks are long-term, and I am very bullish in the equity market for very long-term, so I'm holding them full. But my call options that I'm holding, what I do is when they start to rip, I start to close them out, start to take profits as I see this weekly indices or weekly index starting to see this overbought sentiment. But just because it's overbought doesn't mean I'm going to start being bearish. I'm just going to start to be cautious in a way that I'm not going to be shorting anything. I'm just going to start to take some profits on the stocks options that are moving. That's the reason why I started actually closing out some of my calls on Spider that I've been accumulating on these dips. This is the first time I've been closing them out. So I closed out all of my 2018 January calls now, and I'm only holding now 2019 January calls on Spider and some of the indices. So Spider looks good here. You know, my first target was about 255. That was reached. My next target is 260 and 266-ish. I think 265. 265 is possible, I think, before the year ends, but for sure 260 will get there somewhere in that vicinity. So let's see how that plays out. We'll follow up next week, see how that weekly overbought sentiment looks like. I mean, if we start to kind of see volatility here, kind of start to consolidate like this above this rising channel, that could be looked at as like, you know, correction through time. And then as the you know, spiders start to consolidate or maybe move sideways or something like that with some volatility, but not giving much back and holding above this rising channel, if we can see something like that, what you will see on that weekly oscillator, they will start to kind of pull back and reset before the stock is getting back up. So that's kind of like a likely scenario I'm looking at. So in November, I don't see Spider going too much to the upside, but I don't see this in coming down either. I'm talking like in the intermediate term. So you're probably going to see up and downs, but I'm guessing we're going to hold 20 MA and this rising channel. If we lose 20 MA, you want to watch the rising channel. But I don't see this in coming below 50 MA either. So let's see how that plays out though. We'll, I don't want to get too ahead of myself. We'll follow up next week and see how that looks like. And, you know, if we're seeing the 20 MA holding. But as of today, I want to continue to give benefit of doubt to the buyers in the minor term there. Russell 2000 still looks good here. Still holding up and still, I don't know what happened to my lines here. Still looks like it's consolidating, right? That's a good digestion, right? After this kind of move, you know, you're seeing this kind of a correctional. It's not correcting move. It's more like a consolidation move, digestion move. After a straight up move, we're seeing this is a great, this is a very constructive move. And you know, we talked about how if this thing pulls back to about 144-ish, I'll buy more. I'm still holding sizable position on this. I did close 1/3 of my position right up here at 150-ish on this gap up on that day. When was that? On October 20th, and it's all documented on my journal post, my IWM calls. And so now I'm just kind of wondering, see how it's going to go. But we are dealing with the weekly overbought territory. But on the daily chart, there's a lot of room because of daily oscillators has reset already because of this consolidational move. So let's see how that plays out. Still looks bullish. Long term looks bullish. Weekly chart looks bullish. Looks like we're ready for another leg higher to maybe 155, 160-ish. But I think in the minor term, are we going to move up here from here? I'm not sure. Are we going to come back and retest a 50? Possibly. So I'm just kind of watching and see how that plays out. If he continues to move higher, you know, I think my next target is about 160-ish. That's the level I'll be closing out some of my holding calls again. But if he comes down to 144-ish, I'll probably buy more. Let's look at NASDAQ. NASDAQ continues to move higher. This is a very good constructive move. That rising wedge that everybody talked about didn't play out to the downside. This is why when the trend is up, you always want to give benefit of the doubt to the buyers, even if there is some kind of topping pattern that comes. Because even if there's a topping pattern, if it doesn't confirm, it really not a topping. How many people thought that this was head and shoulder formation, right? I think a lot of people thought that this was head and shoulder formation on the Qs. You got that, left shoulder, head, right shoulder, never confirmed, never got below the neckline, and then it continued on and hit a huge bullish move. And then how many people thought that this was a double top? Well, surely after this kind of move, and we had a double top here, it can't possibly go, excuse me, I don't know what happened here. Okay. It can't possibly go any higher, and it does go higher, and then we got the rising wedge. So it's been really difficult for shorts here on the NASDAQ, because looked like this was head and shoulder from. Actually, it kind of all started from here. Really, there was a crash colors on the NASDAQ. The bubble is gonna burst. That massive head and shoulder formation, well, they never pan out, and then we saw that this head and shoulder formation, more of a mini head and shoulder, that never pan out, and then we had the double top right there, well, that never pan out, and then now we got that rising wedge that really didn't pan out. So again, when the market is up, we always have give benefit of the doubt to the buyers until we see tangible evidence that it has been reversed, right? One of the main Dow theory we have to understand is trend is assumed to be in effect until it gives us a clear signal that it has been reversed. Not that you think it will reverse, not that you see that there's a topping pattern, that it has been reversed, right? So when the market rips like this, you can start to unload some of your position, but hold some, because you always want to give benefit of the doubt to the buyers. This is a market that I am comfortable holding both calls and shares, because this is a market that is continues to grind higher. So then, I'm in a lot of my positions, I'm holding both calls and shares. So what I do is when the market starts to rip, even like XLF, I'll talk about even XLF. I start accumulating calls here, and I held through all this, and I closed some here, but I'm still holding some. We are dealing with weekly overbought sentiment on XLF, but I am giving benefit of the doubt to the buyers that it could possibly grind higher. But my strategy is always, okay, well, I unloaded some, took some profit here, but I'm still holding pretty good size. So if this thing pulls back, I'm gonna buy some more, but if it continues higher, I'm gonna take some profit. You see what I'm saying? XLF here, you can see 20 MA continue to hold there. And you know what? How the XLF condition people is this. You saw this move, right? This is what, many short-term traders, and they're just like, oh my God, the banks are gonna collapse, blah, 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 right? And then it goes up higher. They are not understanding how the uptrend works, right? We got the low, we got the higher low, we got the high, we got the higher high. Definitely we have that cultivation uptrend, and they all wanna talk about this is a double top. Well, this is not a double top until this thing gets below this neckline. We just talked about it on the Qs, where people just are so quick to call things so early without tangible evidence, right? So this is really not a double top. This is really more like a cultivation of higher highs, low, cultivated higher low before going higher. But here's the thing, because we saw this downturn, this is where now many traders are fearful, because like, whoa, man, last time we saw this kind of move, we saw that this kind of decline. So, hey, we may see this kind of decline. And this is where market likely fooled those people. This is how market works all the time. Remember, look at all the setups that you have. It will fake people out, and then it makes a move. And when it does make a move, it makes it like, okay, we're going to do another dad. And then a lot of people are expecting something like that, and then it just keeps on ripping higher. How many times do you see something like this? Sometimes what it will do is it'll come down a little bit, scare everybody out, and then maybe it'll throw a little double top, looks like it's going to be a double top, and then move higher. You see what I mean? So what you want to do is you never want to assume that the market is going to do something. What you want to do is you always want to give benefit of doubt. You want to understand your minor term, intermediate term, and primary term. When I say minor term, I mean like daily chart. Okay, I don't mean like 15 minute, 5 minute. I don't look at intraday chart. I don't day trade. I don't swing trade. And I'm guessing you're watching this video because you are somebody who wants to look at this like a big picture, want to understand the trend, right? So you want to look at your daily minor term, you want to look at your weekly, intermediate, and then you want to look at your monthly, which is a major primary term. Then you understand that as long as we're in this strong uptrend, in a small time, medium time, in a longer term time frame, then you can able to identify, right? Because it's gonna have up and downs in the minor term. But if you understand big picture, then you understand how much, okay, I'm going to give benefit of doubt to the buyers for this time frame, but I'm going to allow room for us to wiggle in the minor term. I don't know if that makes sense. I know it's a lot to take in. When every time, you know, they're so-called experts and teachers trying to make things like easy, like, oh, trading is easy. Trading isn't easy. I'm just being honest with you guys. Trading is not easy. There's so much to think about, especially if you're trading options. There's a, you know, managing your positions, position sizing, understanding your size of your account, how long to hold, where's your target, understanding macro, micro level of the market, understanding individual personalities, understanding your minor term, intermediate term, primary term sentiments, understanding, you know what I mean, your targeting analysis, where to place your stop, when to close out partial position, when to close completely, what strike price to use, what kind of, you know what I mean? There's so much to think about the market. It is not just simple, you know, keep it simple, stupid. It's not like that, right? Only people who talks like that are day traders who trade some garbage stocks. That's all they talk about. But if you really want to understand the overall market, you want to be up there with the big boys. You want to trade what the big boys are trading. You want to understand the overall market. Then you have to there are so many aspects that you have to understand this. There's so many intricate parts in the market that it is almost impossible to master it. This is not like you becoming a surgeon, right? Because when you become a surgeon, when you're in surgery, that person is not moving. That person is not moving, is sleeping. And most people's, our bodies are similar. The way it is put together is similar. We got liver, we got the heart, we got all these different things, and it's similar, right? But when you're trading stocks, man, they're always evolving. They're always changing. Their sentiment is changing. They're always all different things. It is not just price. It is not just this. It's not just volume. It's not just that. It is more intricate. It is more complex than that. There's so much to think about. Technical analysis, I always say that it's easy to pick up, but hard to master. Anybody can draw a trend line. Anybody can put a certain couple moving averages, right? That doesn't mean you're a master. Energy sector. Energy sector is starting to look really good here. You can see that we cultivated a higher high, potentially some sort of an inverted, like a leaning to the upside, inverted head and shoulders here. What I like about the recent moves that we did find support at the first level of fib right there. You can see it got up, came down, and find support at that first level of fib that is coinciding with what? That 50 EMA, right? That rising 50 EMA. This is the first time since XLE has been in this downtrend that we're starting to cultivate uptrend. This is the first time XLE is cultivating an uptrend. How do I know that? Because we have cultivated higher high and potentially higher low. I say potentially because we haven't made higher high yet. So I don't know for sure if this is higher low yet. If this thing goes up, cultivates higher high, then for sure that was higher high, and then that's how uptrend gets developed. Higher lows and higher highs, right? This right there, there's no uptrend. We got lower lows and lower highs. So this is a good look here. Let's see if we can get above 68.95 and call to a new highs and higher low there. So XLE, I like energy sector a lot in the long-term picture, and I think maybe next year sometime we can even get up to 77-ish or something like that. Let's go some of the equities here. Intel. Intel's pulling back a little bit, but that's the level that I anticipated. I think was it here? Yeah. So I think that was a level. Did I do that or did I do this? Did I do that? Yeah, this is what I did right there. So this is a level that right there. So this is a level I anticipated, right? So I measured this to here, right? That. And he pulled back to what? The first level of fib, and then we bounced, right? So this is a level that I was accumulating calls and shares, right? And had that bull trap, bull bear trap. That's a trap for both because it takes out stops, encourages shorts go short, faked everybody out. It just went straight up. So I'm all out of my calls, right? I closed out my calls, all of it here. I started to unload all my calls up here, but I'm holding full shares, and I am holding pretty sizable shares here. So now we hit that 161.8%, and then we're falling back here a little bit. So we got a little bit of bearish, what is that? Like, you know, engulfing candle. Nothing to be like, you know, fearful about, but let's see if we see a little pullback before going higher, or is this waiting on, you know, this thing is extended so much that I can even put in 10 EMA. See, so 10, it might be waiting on to touch the retest at 10 EMA. Do you see that right there? That or consolidation of some sort. Just because it made this kind of move doesn't mean it's going to do that. It won't do that. It won't. Mark my word, that won't happen unless there's like, you know, unless the CEO resign or Intel, but there's a news that they're going to start to sell basketball shoes. Unless something like crazy like that happening, that's not going to happen. But I think the worst case scenario, we might come back down to retest this, challenge this gap. If that gap gets challenged, I think that's a good level to I potentially be thinking about possibly adding some more position there. Let's look at Apple. Apple did see positive ER reaction yesterday. We saw a gap up there, but I think on the weekly chart, the bearish divergence is weakening. So I've been following up on this. It's weakening now. You can see MACD is getting back up here. It's weakening. It's not fully nullified. For this to be fully nullified, what you want to see is you want to see this fast line and then red line start to getting above this neckline area, right? This right there, that. So we're still below it, meaning it could still be some kind of selling pressure up there. On our side, we're still below that. Stochastic, we're still below that. So it's weakening. That bearish divergence definitely weakening. But trend is up, so we have to continue to give benefit of the doubt to the buyers there. Qualcomm, huge move today. It just I think after the news came out that Broadcom may be taking over Qualcomm, but that's a good sign. They're looking really good on this monthly chart here. I actually started accumulating my position here, bought some there, bought some here. So some of those are the levels I started accumulating here. And I bought recently, I bought somewhere, I forgot where, somewhere in that dip there. But I was actually worried because it took so long for it to play out. And then remember what happened was that the news came out that Apple might not be using Qualcomm chips anymore. So we saw initial gap down, and then there was like earnings, which was like yesterday morning or so, a few days ago. And so like there was like a lot of jittery going on, you know what I mean? There were like a lot of nervousness going on. I was holding through all of my positions, understanding the big picture. We were extremely oversold on the monthly and weekly. So, and then before earnings, we started going up here, and then we saw that pop, and then today that. So kind of a weird series of moves and news and all that things. But this is definitely a very good signal there, especially if I actually go to monthly chart. You can see that uptrend is holding, right? The uptrend is holding. So that, and you can see we're just crossing back up there, so that's a good sign. Let's continue on here real quick. GLD is where my fib? Let's put my fib there. So holding the last level. So that's the level want to hold. That's the level that coinciding with the 200 SMA as well. And just because it might get slightly below it, it's not gonna respect it perfectly. We do have that uptrend potentially, so maybe come down, retest that before going higher. But right now, if we just understand the intermediate term, we're still in an uptrend, right? We got the highs, right? We got the low, and this could potentially be low. if we can able to see a bounce. Neckline is here, 123. So if we can able to do something like that, I think this thing ready for 133. So still, let's give it some time, see how that plays out here. Silver is actually not as good as it actually looks worse than gold because we still have like this like lower low thing going on here. But let's say if I throw a Fibonacci though, yeah, so we're just all around it. Let's see if some of that level gets hold. GLD looks worse than silver and gold. Let's put up a fib there. Yeah, it's trading below the fib. So we got so GDX is actually looking just dull. Like it's just been like there's no trend, there's nothing. It's just been doing nothing here. So really no man's land here. But GLD is a bit more promising here because we have trend. So possibly GLD can lead silver and GDX, but let's see how that plays out. We'll have a wonderful weekend. We'll follow up next week, and good luck trading next week.